Hey guys, welcome back to another video. This one isn't really on cryptocurrencies, but related to it, because we're always getting articles out there on like this project here is considered a security or is it a commodity? What is it? So I'm sure a lot of you out there don't even know what a security actually is. So this article is for you on the types of securities out there. We got debt, equities, derivatives, and hybrid securities. Now, what are they? Let's learn about it right now. So what are the types of security? There are four main types of securities out there. You got debt securities, equity securities, derivative securities, and hybrid securities, which are a combination of debt and equality. So yeah, let's learn a little bit about these. But let's first define security. A security relates to a financial instrument or financial asset that can be traded in the open market, e.g., a stock bond, options contract, or shares of a mutual fund, etc. All the examples mentioned belong to a particular class or type of security. So in summary, security is a financial instrument that can be traded between parties in the open market. The four types of securities are debt, equity, derivatives, and hybrid securities. And holders of equity securities, e.g. shares, can benefit from capital gains by selling stocks. Now, I wonder where some one of these cryptos would be underlined, but let's learn a little bit about each one. Now, debt securities or fixed income securities represent money that is borrowed and must be repaid, with terms outlining the amount of borrowed funds, interest rates, and maturity date. In other words, debt securities are debt instruments, such as bonds, like government or municipal bonds, or a certificate of deposit that can be traded between parties. Now, debt securities, such as bonds and certificates of deposit, as a rule require the holder to make the regular interest payments as well as repayments of the principal amount alongside any other stipulated contractual rights, such as securities, and they are usually issued for a fixed term, and in the end, the issuer redeems them. Now, a debt security interest rates on a debt security is determined based on borrower's credit history, track record, and solvency, the ability to repay the loan in the future. The higher the risk of the borrower's default on the loan, the higher the interest rate a lender would require to compensate for the amount of risk taken. It is important to mention that the dollar value of the daily trading volume of debt securities is significantly larger than stocks. The reason is the debt securities are largely held by institutional investors alongside governments and not-for-profit organizations. So that one doesn't really sound like would partake in crypto, so let's keep going. The other type of security is equity securities. Equity securities represent ownership interests held by shareholders in a company. In other words, it is an investment in an organization, equity stock, to become a shareholder of the organization. The difference between holders of equity securities and holders of debt securities is that the former is not entitled to a regular payment, but they can profit from capital gains by selling the stocks. Another difference is that equity securities provide ownership rights to the holder so that he becomes one of the owners of the company, owning stake proportionate to the number of acquired shares. In this event of a business faces bankruptcy, the equity holders can only share the residual interest that remains after the obligations have been paid out to debt security holders. Companies regularly distribute dividends to shareholders, sharing the earned profits coming from the core business operations, whereas it is not the case for debt holders. Okay. And then next we got derivative securities. Derivative securities are financial instruments whose value depends on basic variables. The variables can be assets such as stocks, bonds, currencies, and interest rates, market indices, and goods. Okay, so this is the part where the SEC is going at cryptocurrencies because currencies. But the main purpose of using derivatives is to consider and minimize risks. It is achieved by ensuring against price movements, creating favorable conditions for speculation, and getting access to hard-to-reach assets or markets. Formerly, derivatives were used to ensure balanced exchange rates for goods traded internationally. International traders needed an accounting system to lock their different national currencies at a specific exchange rate. There are four main types of derivatives and securities. One, you got futures. Futures, also called future contracts, are an agreement between two parties for the purchase and delivery of an asset and agreed upon price at a future date. Futures are traded on an exchange with the contracts already standardized in a futures transaction. The parties involved must buy or sell the underlying asset. The other type is forwards. Forwards or forward contracts are similar to futures, but do not trade on an exchange, only retailing When creating a forward contract, the buyer and seller must determine the terms, size, and settlement process for the derivatives. Now, another difference from futures is the risk for both sellers and buyers. The risks arise when one party becomes bankrupt and the other party may not be able to protect its rights and, as a result, loses the value of its position. Then you also got options, or options contracts. They are similar to futures contracts as it involves the purchase or sale of an asset between two parties at a predetermined date in the future for a specific price. The key difference between the two types of contracts is that with an option, the buyer is not required to complete the action of buying or selling. And then there's swaps. Swaps involve the exchange of one kind of cash flow with another. For example, an interest rate swap enables traders to switch to a variable interest rate loan from a fixed interest rate loan, or vice versa. So you got the bonds, hybrids, and equities. Now let's go over hybrid securities. Hybrid securities, as the name suggests, is a type of security that combines characteristics of both debt and equity securities. Many banks and organizations turn to hybrid securities to borrow money from investors. Similar to bonds, they typically promise to pay a higher interest at a fixed or floating rate until a certain time in the future. Unlike a bond, the number and timing of interest payments are not guaranteed. They can even convert it into shares, or an investment can be terminated at any time. Examples of hybrid securities are referred to like stocks that enable the holder to receive dividends prior to the holder's common stock. Convertible bonds that can be converted into a known amount of equity stocks during the life of the bond at a maturity date, depending on the term of the contract, etc. Now you got hybrid securities are complex products. Even experienced investors may struggle to understand and evaluate the risks involved in trading them. Institutional investors sometimes fall at understanding the terms of the deal they enter and into while buying hybrid securities. Now, if you want related readings, you can go to the CFI's guide on types of securities that keep advancing your career and additional CFI information. So investing for beginners, option calls, puts, rate returns. So if you're in that and you want more information, I have a link in this article down below. But those are basically the four differences between securities. So where do you think, with the SEC going after these companies, which one of these does the cryptocurrency stand under? For like the last one with Paxos talking about Binance USD being a security, is that under an equity, debt, derivatives, or a hybrid? I don't know. You're talking about the stable coin. It'll probably be under derivatives, is what they're trying to go after it. But yeah, so that's just a little information on types of securities out there and what a security actually is. So if you guys like this information, hit that thumbs up for me, subscribe to the channel, and until next time, the Crypto Sherpa is out.